The US Federal Reserve System, which is trying hard to bring down prices, is worried about the super core price index, not the core price index, not falling. As US prices, which seems to have fallen for a while, have recently shown signs of rebounding, the possibility of early interest rates cut by the US Federal Reserve is receding. Rather, even speculation that the Federal Reserve may raise interest rates is raising its head, making investors nervous. Some investors are starting to bet on interest rates rising. The US Federal Reserve System, which is trying hard to bring down prices, is worried about the super core price index, not the core price index not falling. The super core price index more accurately shows prices in the service sector by excluding housing as well as food and energy. Fees for services such as barbers, layers, and plumbers are largely reflected in this. Federal Reserve Chairman Jerome Powell also mentioned that the super core price index will be an important reference in understanding the future direction of U.S. inflation. The Fed has been paying attention to this since November 2023. The U.S. Federal Reserve raised interest rates 11 times from 2022, when prices began to rise rapidly to July of last year, raising the current U.S. base interest rates to 5.25 to 5.5%. The U.S. CPI, which rose sharply to 9.1% in June 2022, has continued to decline at the same time as the interest rates hike. As reports emerged that the U.S. Federal Reserve's FOMC may give up its interest rate cut plan and instead completely revise its monetary policy stance by raising interest rates, the New York stock market became more alarmed. Not only the New York stock market, but also the dollar exchange rate, government bond interest rates, international oil price, gold price, and cryptocurrencies such as Bitcoin, Ethereum, and Ripple are also closely watching the FOMC's complete revision report. As CPI and PPI prices appear to have risen unexpectedly, cryptocurrencies on the New York Stock Exchange are shaking due to concerns that Jerome Powell may turn to an interest rate hike. Ethereum, the second largest cryptocurrency market cap, is showing a significant rise and is approaching $3,000. Ethereum's surge reflects the expectations of upgrades and spot ETF approval. Bitcoin is in a sideways trend. Ethereum is rising significantly. The increase is 5 times greater than that of Bitcoin, the leading cryptocurrency. Unlike Bitcoin, which continues to trend sideways, Ethereum is approaching $3,000. The last time Ethereum exceeded $3,000 was in April 2022. The rise of Ethereum's virtual currency appears to be due to the impending large-scale update. Ethereum is scheduled for an update called Dencun next month. This upgrade is focused on increasing network efficiency. The market expects that the upgrade will increase data storage space on the Ethereum network and reduce transaction costs. Ethereum will launch Merge, which will change the operating method from proof of work power to proof of stake POS in September 2022, and Shopella, which will allow Ethereum owners to withdraw their investment assets in April 2023. It was significantly ahead of the upgrade called Shopella. In addition, expectations are being reflected that a spot exchange traded fund ETF will be approved as early as May, following Bitcoin. The world's largest asset managers, BlackRock and Fidelity, have applied for spot Ethereum ETF and awaiting approval from the U.S. Securities and Exchange Commission. Balance on Economic magazine reported that as the consumer price index in January came out higher than expected, the expected time of the interest rate cut was delayed, and the interest rate hike could also be discussed again, as inflation in the United States appears to be still hot. The possibility that the Federal Reserve System Fed will resume raising interest rates instead of lowering them has even been discussed. It was predicted that interest rate increases could resume if the February CPI, which is announced in March, is high. The Federal Reserve raised interest rates 11 times to bring down prices to 2% after 2022.